past. And in addition to the external sector performance, we are looking at the tourism-related projects as well as worker remittances to have a fairly key anchor. And I won't deal with it any further because you have already heard from me on that. And in this background, the implementation of the monetary policy will be multidimensional. We will be considering many factors in our monetary policy as well. We'll be looking at the policy interest rates. We will look at open market operations. We will look at the exchange rate, which will be viewed as a key stabilization factor of the economy. We will look at the engagement which we have with the policy discussions with our Monetary Policy Consultative Committee, as well as the other members of the public that we have various interactions with. And we will also look at the productivity and the capital capacity utilization as key anchors in the war against inflation, in our view, in the next year and beyond. And for our record in the monetary analysis for 2012, the money multiplier will be projected to remain unchanged at around 5.6 in 2012. The growth of broad money is targeted to be around 15%. Reserve money is targeted to grow at around 15% on a daily average basis. Private sector credit is expected to moderate and reach around 16%. Foreign inflows will be actively encouraged. And we will also wish to look at the real value of savings in order to infuse the savings culture in our country. If you want to retain the savings at high levels, you need to preserve the value of your savings as well. If people believe that over a long period of time that your savings will erode, then the commitment that they will have towards savings will be less. So we will be looking at the value of the savings over the longer period as well. And on that basis, the project expansion of the broad money would be the GDP growth of 8%, GDP deflator of 6.5%, and the broad money M2B to have an annual average of 15 for the year 2012. We will continue our global collaboration with global financial institutions. As you know, the last test date for the IMF SBA program was 31st of December, and we expect a review mission to come on the third week of January 2012. And we will negotiate with the IMF for a follow-up or a surveillance program. And we also are looking forward to the FSAP, the Financial Stability Assessment Program, which is to be conducted in 2012 in collaboration with the IMF and the World Bank during the year. We need to reiterate, as Chandra mentioned, that these projections will be only as good as the macro factors that affect the country, but we will endeavor to maintain the stability even in these trying circumstances, but we have to give a little bit of a caution that we may have to change in the event that major changes occur in the rest of the world. So we will communicate with you closely on the due dates that has been mentioned. We also would invite you to visit our website, 194,000 visits, which is happening every day. Maybe it can take in another 500,000 if necessary, so we would open it out to you. I want to make a special mention of the various stakeholders, particularly the Monetary Policy Consultative Committee members who have every month had a very useful discussion as well as offered their advice and guidance. I want to thank Mahen Dayananda, the chairman, as well as the other Monetary Policy Consultative Committee members for the interest that they have taken. Many of them serve totally voluntarily, and they have been extremely helpful in their views, and we want to thank them very specifically. Now, let me go on to the policies for the financial system stability. Here again, we have a difficult time, but we must start off at the point where do we want to reach? We believe that Sri Lanka now must fashion its own policies to go to a $100 billion economy. From $60 billion at the end of this year, or rather end of last year, we need to see how do we move and what do we need to do in order to move to the $100 billion capacity that we are envisaging for ourselves. So we have to look at the assets of the banks, which will probably increase to 8,000 billion or 8 trillion from around 4.1 trillion now. Lending to reach about 5 trillion. The net interest margin might have to come down to about 3.3% in the next few years. Market capitalization in the stock exchange might probably reach 70% of GDP by that time. The corporate bond market will probably be 1 trillion. So enormous changes will need to be taking place in our economy in the next few years if we are to really position ourselves to be a $100 billion economy by the year 2015. It won't happen automatically. It's not going to just work. We need to all fashion our policies to get to that. So towards that scenario, banks will need to synchronize their own evolving needs, and we expect them to do that. We have had discussions with them. And in particular, innovative and sophisticated financing solutions will need to be created by them, using their own balance sheets better, using their capacity for greater capital infusions. The central bank will also, on its part, strengthen the regulatory regime. We will have more frequent examinations. We'll have a bank rating system, which will be internal to us. We will also be looking at the exposure to related parties. And in the non-bank finance sector, we will be looking at the Finance Business Act to be implemented carefully in time to come. To face the challenge, internally we will do certain things. We'll equip our supervisory teams. We will develop our early warning systems. And we will continue to enhance the knowledge of the banking community as well. We will support corporate debt market. We will support the greater broadening of the government securities market. We will also encourage the vibrancy of the stock exchange when it has to move to a new level, which I believe it will take place in the next few years. And we will encourage as well as support those ventures in time to come as well. The payments and settlement systems also have to be now prepared and fashioned. We are taking the necessary steps to do that. We are upgrading the Lanka Settle system. We are establishing the national payment switch. We are introducing the line encryption technology. We will assess the payment systems against new core principles of the BIS. We will publish the oversight practices of payments and settlement systems because we expect the total transactions to increase by about 45 to 50% in the next few years. So we need to have that platform ready, and we cannot follow, we have to lead. And that is what we will be doing in the next few years to ensure that the payments platform will be provided for you to do your businesses. The FIU environment will be also kept at a robust level, and we will encourage the foreign exchange transactions even greater by granting permission for local listed companies to be listed in foreign stock exchanges and general money changing licenses being granted to many other outlets as well. We will hopefully have some automated foreign currency encashment operations so that we deal with the money changing problems that we are having. And we will ensure that there are convenient formal mechanisms provided for people to encash their monies as well. And here, I'd like to thank the committee, particularly the Financial System Stability Consultative Committee, which has helped us in immense measure, particularly Mr. Asirvadam, who is the chairman, and his team, for giving us the insights necessary to maintain the financial system stability in our country. Let me now quickly go through the policies to strengthen the economy in 2012 and beyond. We will have to continue to anticipate changes, anticipate the challenges, and prepare ourselves even better. We will see several improvements taking place in the agency functions, and particularly in public debt, we will be working actively to bring the public debt management to a level where we bring the debt to GDP down to a level of about 60% by the year 2016. It is not an easy task, but it's something that we will be working very carefully towards in order to bring it to that level. Here, we will also endeavor to mitigate the impact of the rupee depreciation on the public debt. If you look at our total public debt, you find that at the rates of exchange that we have borrowed, it has been about 1,576 billion, but at the time of conversion, it has gone up to 2,253 billion, an increase of about 677 billion as a result of the impact of the depreciation of the rupee on our total foreign debt. If you look at the yen debt alone, we have borrowed about 260 billion, and that is today, in today's values, as high as 550 billion. So these are the matters that we need to give special attention to, and we will give special attention to see how do we fashion our policies to ensure that the impact that these have will be minimized, because it can be quite a sizable chunk that we have to deal with in the event that we do not take steps to mitigate the impact of some of those problems. So that's something that we will be endeavoring to do. It's not as easy as it sounds. It will take a lot of work to be done. We will have to be careful in the way that we deal with it, but we have to take cognizance of these issues if we are to deal with it. If you take 677 billion rupees, it is quite a lot of money, considering the fact that the Galle-Colombo Expressway cost us 77 billion. So this is 677 billion. So these are the matters that we need to give attention to. And even if you take a company, companies also are affected by the same situation. If you have borrowed from abroad, you will need to ensure that you have the capacity to repay, and that is something that we will be giving special attention to, and that's something that our public debt department will be very conscious about as we go on, because not only do we want to manage the public debt in the usual way, but have the innovative methods in order to deal with it on a long-term basis as well. Provincial development will be given a major boost. We will target the SME sector. We will ensure that the lagging regions get sufficient monies to come in, and we will also assist the government and the private sector with the necessary interventions to move towards the high growth interventions that are needed, particularly in tourism, agriculture, and fisheries. There are targets that have been set out. Those targets will be with you when you have the papers with you. Each one, there is a focus in tourism, focus on agriculture and the fisheries, in the construction sector, which we believe will be key anchors for our economy to move forward. ICT, apparels, industry, and remittances will also be supported, and we want to ensure that the level at which these are maintained will be at a robust level to ensure that the growth momentum is maintained. Ports and aviation also have had serious investment, which we will be working on in order to deliver growth for the future. In line with these objectives, the EPF will actively implement the strategies to maximize returns in a low interest rate regime. We do have to understand that we are moving towards a low interest rate regime, and in such a situation, to deliver returns is a challenging one, while ensuring that there is a steady growth in the fund. And we will have new methods by which online member contributions could take place, and the number of contributing employers could also be enhanced. Currency management will be strengthened. We want to see that the soil notes are a thing of the past. It has been a challenging situation. Just like to share a few thoughts with you, especially the lower denomination notes, 20 rupees, 10 rupees, and 50 rupees. Very difficult to get those back because it doesn't get to the banks as well, so that it comes back to us. So we have to now have some innovative methods by which the soil notes can be brought back, and we can issue some fresh notes. And next year we will want to do that, because the country is sometimes looked at by foreigners when they come in by the quality of your notes as well. And that's something that we will be looking at very seriously, to see that you get some nice crisp notes so that people will have a better image built up about the country as well. Let me conclude by saying that we have developed a focus, and that we are committed to the implementation of our policies as well as our plans. We do have difficulties sometimes. Sometimes it may not be able to deliver on every area that we have set out. But as you know, it's always a balance that we need to strike. But our overriding commitment will be to that of financial system stability as well as price stability. That has been the challenge for the central bank team. That is the function for which the central bank has been set up, and we are duty bound to see that we deliver on the society's acceptance of our role, and we will endeavor to do that. In all our work, we have been helped greatly. We have been guided by His Excellency the President, as well as the Minister of Finance, His Excellency Mahinda Rajapaksa, the Deputy Minister of Finance, the members of the Monetary Board, Dr. P.B. Jayasundara, the Secretary to the Treasury. We have also contributed immensely by having the interest rates at the current levels, which I believe has saved the Treasury almost 100 billion rupees by way of savings of interest. You can see what a huge amount that is when you have a large base of public debt. So I think he has also contributed immensely to see that the inflation levels are brought down, and that has been an immense benefit to the country. I also want to make special recognition of the members of the Monetary Board, Mrs. Mano Ramanathan, Mr. Nimal Velgama, and Mr. Neela Mugilia. Thank you for being here.